In this video, we are going to be analysing Meta. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, we're sitting around $260. Again, pre-market, we are selling off a tiny bit. But what are these key levels I'd be paying attention to over on Meta going forward? So, as always, what we do is we look at the standard deviation channel charts. On the left, we have a 6-month chart. On the right, we have a 1-year chart. Now, what's clear on both of these are we are uptrending. So what this usually means is I'm not a massive fan of catching these short buys. Instead, I would try and catch these long buys. Again, if the short and longer term are uptrending, we probably want to be catching and utilizing that upward trend. Now, one thing to note on Meta is obviously we do still have the problems with the debt ceiling. The overall market is bullish most likely until the deal is actually confirmed and pushed through by Congress. That's all we're waiting for now, Congress to accept it. Once we get that, the market may turn a bit more bearish. If so, Meta is likely to follow that and start pulling back. And again, this could be good if we're looking to catch it long bias. So, to start going over those key levels. Firstly, if we are long bias now, what are key levels? And again, I'd be firstly paying attention to what is the fundamental news, what are the catalysts? And it is going to be the debt ceiling. I'd be paying attention to that over any technical level. As we can see, if Congress does confirm it, again, there's a high chance we do start pulling back in the market. If so, it could be a good idea to at least lock in some profits, if not get out of the trade completely. But if we do continue up, what are those key levels? So if we do push higher, we're looking at $275 to around $278. Now, this is our second deviation on the 1 year and our first deviation on the 6 month. Now, this is where we start becoming a bit more overbought. We come into overbought territory. So now this is up to you as a trader or investor, whatever you're trying to do, is if you want to take the risk of holding past the overbought areas. Now, this is usually where if I'm trading at long bias, again, that will be my profit target. I will be getting out past that level. Now, if we do go higher, we break that level and continue higher, then we have further resistances at 325, 350, and again we can use these as a zone. It's a 10-point range in a stock that's over $300, so not a massive percentage difference. Now this would be that next key range of resistance. Now again, if I was long bias, let's say we try and take the trend, so break above that level, come back to test it as a support, this level holds, and then we push upwards. Again, this would be our target, but where we're coming into here, we are coming into our third deviation on the 1 year. This is extremely overbought. Again, if you understand standard deviation channels or just standard deviation in general, you know at the third deviation, 99.7% of data should trade within the range of its third deviation. And again, that's what this green one is. So what we really know is coming into this level, we are extremely overbought and it wouldn't be unlikely to start seeing a pullback. Now again, we would still have some reduced size because again, if we're shorting that move, it is uptrending. So again, we are playing against the shorter and longer term trend. So if we're doing that, again, we're going to want smaller size, most likely going to want defined risk. So if we're shorting the shares with buying calls, defining that risk. But I would definitely be paying attention to that level if we did push higher. And as a final resistance, we have 370. So again, these would be those key upward targets if you're looking at resistances. Now, to me, I'm personally not looking to really trade these levels unless we start coming into around this 315, because again, then we're coming into third deviation. I'll just be looking to kind of play that short bias from around that level or above. But really where my main trade plan comes is if we start putting down to the downside. So what we can see is at 235, we have our first deviation. Again, this is normally a resistance, but as we're trading over it, it's now turned into a support. So if we do come back, potential bounce location in here to capture or try and continue with this upward trend. So that's one level I'd be paying attention to. Now, if we start to break it, and on that, I would have a relatively tight stop because from $232 to $295, this is the range of statistical mean between the 6 month and the 1 year. This is basically considered fair value. If I'm trading a stock, I don't want to be in at fair value because again, then risk to rewards are going to kind of be skewed. However, if I'm investing, then getting in at this range or below is usually going to be the ideal area. But where does more trading opportunity comes? So 185, this is our first deviation on the 6 month. Now this is a trading opportunity. Again, it only gives you about 9 points to this fair value area. So probably only a day trade if I'm trading that range. Really, the main trade plans will come from around 155 to around 140. Again, first deviation on the 1 year, second deviation on the 6 month. These are the levels where I'd be looking at it long bias. But obviously a relatively big pullback from where we are now that requires about a 40% in price. So probably not something we're paying attention to all that often now. And again, that's why we covered these upward targets first. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.